Hey, folks, thanks for joining us again on another live stream. We've got a couple guests with us today. We've got Ryan from State Insurance, and we've got Brian Marks from Marks Mortgage Group, as well as Phil, which you guys know is the manager on my team here. Folks, we got a lot to unpack today. You know, we've got a lot of concerns going on in the real estate market here in Tampa. We just had 2 hurricanes that passed, a lot going on, but you know, I really want to jump into what the housing market's doing right now. Kind of what's that feel with boots on the ground. I want to jump into insurance because there's a lot of insurance talk. You know, what's going to happen post hurricanes? You know, what should we have known even beforehand? So that's really where Ryan's going to come into play. And then, you know, mortgages are on the move again. So that's where Brian's going to jump in and just kind of give us some heads up, like what's to be expected, if we can even pull out the crystal ball. We're still on that roller coaster. And then at the end, we're going to bring it back full circle back to real estate and, of course, answer your questions along the way. So I'm sure I'm going to give it a little bit of time here for some people to jump on, but to give that proper introduction, Ryan, State Insurance, he's the agency owner, so he's got a little clout there. Thank you for joining us today. Brian, you know, obviously, with Gershman Mortgage, you guys, if you ever need insurance or mortgage questions, these are the 2 guys that we use locally as a team. So definitely feel free to reach out. As we have a few of you boarding on board into our live stream, guys, let us know where you're from in the comments and let us know if you have any questions about insurance, mortgages, home prices. So Phil, let's kick it off with some real estate.
Sounds great.
What are you seeing boots on the ground right now? What are you seeing going on?
Well, you said roller coaster. There's definitely it is an emotional time. You know, emotions are high. You know, I think we got to get a little bit more into really what was affected. You know, the coastlines were obviously it was where the media attention was, and there was a lot of heartache there. There was a lot of losses, and there was a lot of damage, and there are people that are kind of saying, hey, I don't know if I want to stay here any longer. But again, that only really makes up about 5% of really what this storm did. So, as far as the, inland, there wasn't really, as much of an effect. Obviously with Helene, there was more water surge, right? So that didn't really go into the inland, counties. And Milton came in, it was more wind-based. So as far as the damage that was in the suburbs, it was more tree related, trees down, out of power. But you know what? They did fine. They did great. There was really no, much risk as long as you stayed inside. I mean, we were just having a hurricane party. Wasn't too bad.
Yeah. and that even sounds scary to some people, but realistically, a lot of wind, a lot of debris, meaning loose branches falling and stuff. But I mean, our homes are built, right? They're built to kind of hang in there with a hurricane, being block homes and things like that. Just wind anyway.
Right.
Water, that's a different story. We've experienced that now. So, I think that, let me take it back to the beginning. One of the things that you said stood out. You said that there's a lot of people in those coastal areas that really got hit with the storm surge that are saying, hey, I think I might want to, get out of here. Are they saying I'm getting out of Tampa or Florida altogether? Or are they just saying, hey, I might look to move to a different area in Tampa?
Well, I also think emotions are high, right? So, there's that reaction, that you're going to have immediately. And, you want to see, how it settles. But as far as, I think there's 3 types of people, there's going to be the homeowner that realizes this storm that came has only been 1 in 100 years. They're going to go back, rebuild, go back to the way that they lived. There's going to be, those homeowners that are going to be, saying, hey, I am done with the coast altogether. I want to move inland, maybe out of Florida. Then you have that third one. It's like, okay, hey, I want to stay here, but there's going to be certain procedures that I'm going to have to do to mitigate my risk. That could be elevation, storm shutters, impact windows, probably codes and things like that are going to be reconsidered. So I think there's different people out there that feel different ways and are impacted differently. And I think it's a case by case basis for most people.
Yep. No, thank you for that. So yeah, I'm going to say, hey, Sylvia from Brooklyn. Always like to see where everybody's from. And then she also said she survived both on decluttering mission, car 5 days, shelter 1, no gas available, no charge, hotels. Yeah, I mean, I had no power for 6 days, so I know what you mean. There's a lot of just juggling, and that's kind of Florida life in a weird way.
Yeah.
Um, we don't often, I mean, you can go years without ever feeling an effect of a hurricane. And to be fair, I go back 4 generations in Tampa, and I've never had a house flood anywhere in Tampa. And I'll be honest with you, even with this one, I haven't had any flooding in the areas I live. I live right off the river. I have a family member that lives South Tampa, but a specific area that did not flood. And then, of course, Carrollwood. So we're kind of spread out and really had somewhat minimal damage. So that's kind of cool. Do have a question here if anybody wants to jump in on this one. Thomas said, how is it possible that areas like Treasure Island and St. Pete Beach have never flooded like this before? It feels like it was never smart to build one-story homes at 1 foot above sea level. I don't know that you could say they're 1 foot above sea level, but yeah, I know. Way back in the day, I guess they built them because a lot of those structures are older. They're not like brand new structures. Brand new structures are building with a different mindset, right? They're building with garages down low. So yes, a garage could flood or even potentially stilts, things like that. So, but how have they? Well, we've never had this kind of storm. That's the easiest way to say it. This was a storm that was once in a long time, and hopefully that it stays that way again. With all this said, I think the biggest questions around all of this, because I did shoot a video a few weeks ago. It's like kind of open-ended, like what's going to happen, right? I think the biggest questions are really circulating insurance, because insurance is kind of the unknown in a way to a lot of people, not only, now after the storms, but before the storms. So Ryan, I'm going to pick on you a little bit here. And if anybody's watching, you have insurance specific questions, he's a great guy to just, drop some questions in the comments and we can get those answered for you. But I would start by number one, and I do want to talk about what may it look like after hurricanes here, but maybe just number one, jump into insurance. Like, what is flood insurance? Like, who needs it? Why do we need it? Let's just start right there, because that's the biggest damage was caused by the flood surge. So let's talk about that with Tampa.
Yeah, and that was actually one of the biggest, I'll say, claim factors on our end too, where in the most devastating. So, wind, it's usually exterior. It's more, I'll say, cosmetic, roofs, shingles blow off, not like the entire roof, but shingles, debris falls on, the property, maybe on the house. But the flood claims were awful, where people lost everything. I mean, from furniture to, personal effects to their entire inside. I mean, it's all gutted. So when it comes to like flood insurance, the two things that I always tell people to look out for is one, your proximity to water. So if you're on a river, if you're on the bay, if you're on a canal, even a lake, like those are good indicators that you should probably have flood insurance. The second is honestly drainage. As you know, Tampa is such a booming, I'll say, market where people are building left and right. And they're usually building over cow pastures, right? So it's just farmland. It's land that has grass that water can drain in. They're putting concrete over that. Rain's going to happen. That water's got to go somewhere. If it can't go on the ground, it's going to go up. So even like when I was living in Seminole Heights, which is one of the highest areas in Tampa, I had flood insurance because the infrastructure didn't allow for proper drainage. So when it comes to flood insurance, and I get asked this question all the time, where like I have hurricane insurance. So if the hurricane causes rain, isn't that covered under my home insurance policy? And the answer is no. So the best way to think of it, if you have water that starts outside and rises up into your house, that's defined as a flood. And flooding is not a common coverage on a standard home insurance policy. And that's where you would need a separate flood insurance policy. Whether the gold standard is FEMA, there's a lot of private companies now that are offering flood insurance. And that's where you would have to get that policy to cover you for that risk, that rising water. If a hurricane blows the roof off your house, or a tree falls on it and an opening's caused and water comes down into your house and floods it, that actually can be covered on your home insurance. So again, good way to think about water up, that's flood, not covered. Water down into the house, it can be covered under your home insurance policy.
Okay. So totally get that. Now, real quick, guys, we got a decent amount of folks watching, which I appreciate. If you guys have any questions or concerns, specifically, we're talking about insurance right now. We're going to get to mortgages and then back to real estate. Let us know in the comments your questions, and we're happy to answer them here for you. Thomas, I saw your question. I'm going to get to that in a second. Now, with flood insurance, though, what if I'm not in a flood zone? And I'm saying this like for a lot of folks that are questioning, because, you know, I live off the river. For me, I'm not, my property's in a flood zone, but not the structure of my home. So I'm not required to have it. I do carry it because what you just said was, hey, if you're close to a big body of water, it probably makes sense. I would say the biggest difference for me is that because I'm not in a flood zone, it was more affordable. I pay about $700 on top of my normal insurance for the year to have insurance. It's really not astronomical to have that safety net. That being said, what about somebody in, you know, the suburbs, or what I would call like maybe Wesley Chapel? I did see a little bit of flooding near the river out there, which not, you know, like far off Wesley Chapel, that people were getting hit with no flood insurance because they didn't think they needed it. So what is your thought there?
Yeah, you're right. The further you are away from a body of water, your home's deemed what's called an X flood zone, which is basically defined as a 0.2% chance of flooding each year. So it doesn't mean it's impossible. It's just improbable that'll happen.
Yeah.
Flood insurance, you're talking a couple $100 a year. I would say, especially if you're like, I'm in Wesley Chapel and I'm on a little, like, I'll say a little lake, and my flood insurance, I have it. I think it's $540 a year. To me, it's worth it to have that peace of mind. Because when we had these 2 back-to-back storms, that water, it didn't get up high enough to make me super nervous, but it got higher than where it normally goes. And that's where it's just, I think, a good idea just to have it. And what's nice is you can add it at any time throughout the year. So if a hurricane's coming, you can't add it. But let's say you're buying a new house and you're just kind of on the fence about it. You have a lot of expenses going out, and then you go through the rainy season and that water, you know, accumulates over the sidewalk, or you notice it start coming up. You can add flood insurance anytime throughout the year. So just something to keep in your mind.
Cool. So ideally, I know a lot of people are freaking out about like, well, especially if they're not from here, it's like, well, how do I know I'm in a flood insurance? I always say, go look up the flood map and you can easily know where you're at or what's around you as well. Because like I said, I'm right off the river. Everybody around me is in a flood zone. I just happen not to be because my house, the elevation of my property. So that's always like peace of mind there to know where you're at or what's around you. And that's the easiest answer for yourself. Going back to Thomas, it says, is it true that everyone inland subsidizes the flood and home insurance for people living on the barrier islands? My question before we answer that one, Ryan, is he kind of leaning towards that citizens question I was asking you earlier?
Kind of. Yeah, a little bit.
Okay.
Yeah, where there's, I think there's a lot of crossover between flood and the home. So yeah, a little bit of a crossover there.
Well, I guess if you want to answer that one, I don't know. I don't know that one.
So I'll say a short answer is kind of yes. Insurance in general, it's a pool. So all 4 of us are contributing $1,000 a year, and we're agreeing to pay each other's claims. So Brian has a tree fall on his roof, and we've accumulated $10,000 over the course of years, and we're going to use that to pay Brian's claims. So insurance is, again, we're all paying into a pool, and we're all helping everyone in that pool help pay for claims. So essentially we are, subsidizing those other, I'll say more riskier properties, but their prices are priced accordingly to the risk. So if you're right on the water and your house was built in the 50s and you're right at, sea level, your flood insurance is probably going to be $8,000 to $10,000 a year. I mean, we had one, it was $12,000 a year for flood insurance, and they were right on in Newport Richie, like right on the Gulf there, and it was $12,000 a year.
And I'm sure the value of that home was different too, though.
A lot different. I mean, you're talking, well over $1 million compared to a $300,000 house in Wesley Chapel. So, so their risk is priced accordingly, but we're all, paying into it to help, pay for those damages.
So I want to shift gears a little bit. It kind of goes off of what we're talking about, but I think this might be one of the biggest concerns is like, where are we headed? Like, we just had 2 major hurricanes. Number one is, for me, I would say is like, is insurance just going to go through the roof, right? Is it going to be something where it's like, man, I don't know if I want to, can we still live in Florida? Is it still going to be affordable? That's number one. Number two is, before this even happened, over the last few years, it's been a roller coaster ride a little bit too, with a ton of roofing claims, a ton of technically fraud or loopholes, right? That really, that's the culprit here for the last few years that drove a lot of insurance companies out of the state, causing it to go up and less competition. And then Citizens jumped in And that became a whole nightmare now. So, I mean, you package this all together because people right now are saying like, we can't afford insurance. Now, there's no denying that it's higher than it was, but I was just telling you that mine went down 25% last year. And you gave me some really good insight saying, well, it's probably not what everybody's thinking right now. So let's kind of back through that and say, okay, how did we get here? How did we get to sky high premiums? And then we'll talk about Citizens. So yeah, talk to me about like, how did we get here?
So it was a loophole, as you mentioned, kind of in policy. So it was first, I'll say, recognized by an attorney who kind of exploited it, and then it just spread like wildfire throughout I'll say, mainly roofing industry. So there was really 3 loopholes in a policy that allowed for a lot of this, I'll say, fraud, where policies allowed a homeowner to assign their policy benefits or their rights to a third party. And so what happened is roofers would go into neighborhoods and they would start knocking on doors and they would say, oh, it looks like you had some storm damage on your roof. We can get you a free roof. All you have to do is sign some paperwork. We're going to handle the claim and everything for you. So they would sign the paperwork and that roofer would file the claim with the insurance company. And this is kind of where the first loophole was used, where let's say a normal roof is $20,000. The roofer would submit an estimate to the insurance company saying we want $40,000 to replace the roof. And if the insurance company's like, no, here's 3 bids, we can do it for 20, we're going to push back. Since the roofer had the policy rights, they would sue the home insurance company on the homeowner's behalf. So a lot of times the homeowner had no idea there was a lawsuit going on, but the roofer would sue the insurance company. So then it became this game of, is it cheaper to just pay the roofer or try to fight it in court? And that's really where the other 2 kind of loopholes came in, where Florida was a one-way attorney fee state. So whether win or lose, the insurance company always had to pay their own legal fees. So again, every day their clock's ticking that this pending lawsuit's going. The second is if they lost the lawsuit or it was settled for $1 above what the insurance company's estimate was, they had to pay the homeowner that amount, and then they had to pay the winning attorney with a 4x fee multiplier. So we would get all these like emails from companies that are like, this $20,000 roof cost us $150,000 because of legal fees and everything else. And with all those roof claims, and this kind of goes into what you mentioned in that first part with like what's going to happen in like the future. So all these roof claims that are going in, they weren't really hurricane related claims. They were all their perils. So just everyday claims, which that is affecting the insurance company's bottom line. The insurance company's paying that out of their savings. I mean, that's why so many companies went bankrupt. So many companies left the state. So many companies put heavy roof guidelines in place as a way to like stop this hemorrhaging. So the good news is last year there was some legislation change that plugged those 3 loopholes. So now you can assign your policy rights. It's a 2-way attorney fee state now. Two-way legal system. So if you lose, you have to pay the winning party's legal fees, and they got rid of that fee multiplier. So those 3 things have really combated that loophole that a lot of roofers were using, and we are starting to see rates stabilize and even come down in certain situations. Because
now is one of those. Oh, I'm sorry, keep going, man. I didn't mean to.
Oh, no worries. Yeah. Well, and that's kind of what you kind of went back to that first thing, like what's going to happen to our industry after these major hurricanes. The good news is insurance companies like hurricane claims. They budget for them. So insurance companies have something called reinsurance, and it's basically an insurance policy over their entire book of business. So for conversation's sake, they have 1,000 homes they insure. And if every home were to be completely destroyed, it would cost them $25 million. They'll have a $25 million insurance policy over their book of business, and they may have a $5 million deductible. So they pay the first $5 million of hurricane claims. Anything over that, it's on their reinsurance policy. So those reinsurance costs, these claims that are coming in, are already accounted for, and you've already essentially paid for your policy. It's when they don't have enough in reserves and enough funds, that's where we start seeing rate increases, because they have to, as I say, financially viable in our state, they have to maintain a 5% profit margin. So if they drop below that, the state's going to step in and say, you have to increase rates, because the state backs every admitted Florida insurance company. So if they go bankrupt, the state of Florida steps in and starts paying those claims, which they don't want to do. So that's where like these hurricanes, although devastating, I don't foresee a lot of drastic changes like in the last couple of years.
Right. Yeah, because the insurance has insurance. But that's held separately as well, from what I'm hearing. So, going back to the I guess what you had said about the 3 legislative moves, right, that kind of brought us all back around to more of a safe place, right, where we're not seeing as many of those lawsuits and things, that's also inviting people back in, because a lot of those insurance companies took off out of Florida, which is less competition, less people to service all that. There's more risk and fees. So we're seeing, and that's where I said my insurance rate actually probably went down about 25% last year. It was a new company. I asked you, I said, is Tip Tap a good company? Kind of weird name. And you're like, oh yeah, it's backed by, I think you said HCI.
Yeah. Yeah. They're publicly traded, big company.
Yep. So going with that, it was like, oh man, I found this new company, new blood that's not like dinged by this bad history. And they kind of came in and said, yeah, we'd love to do that. And here's a competitive rate. So you actually mentioned to me that we kind of will be seeing more of that, right? So that being said, do you foresee these, the insurance prices kind of going up and up and up and up moving forward?
I don't. I see more stabilization and then starting to decrease. So the companies that have weathered the storm of this like roofing fraud issue,
yep.
They're digging themselves out of the trenches and they're starting to see the light at the end of the tunnel. So those are the ones that are stabilizing and starting to come down.
Yep.
Because again, they're able to maintain their reserves. And there's supposed to be 7 or 8 new companies actually coming into Florida this year, which is again another good, healthy sign that the legislation that was passed really took away the fears of a lot of insurance companies. A lot of these bigger companies like State Farm, Progressive, Geico, they look at Florida as an anchor, where if that anchor is weighted too much, it can actually sink the ship. So that's where a lot of these big companies, when you have a lot of investors, they look at Florida as a massive risk where premiums are higher here, but you're paying out tons more than you would in Kansas, so that's where they're focusing more on that safer options. But with this new legislation, it's making Florida safer options for a lot of these companies to come back into our market, new companies to form, companies like HCI to kind of have offshoots and start a new company that doesn't have that, I'll say, bad blood and that kind of claim debt on the record. So they're able to come in and really undercut the market.
Yeah. Hey, folks, we got a bunch of you watching on here. Appreciate you watching. If you have any questions for Ryan about insurance or mortgage, because we're about to get into that, please drop it in the comments, and we'd love to hear from you and ask your questions. This is a perfect time for that. I was reading an article the other day in the news, and it was just, you're seeing all these negative posts about Citizens Insurance and like, man, good luck with Florida insurance as we're talking. So now we know that things aren't going to get crazy, or they shouldn't get crazy. And we're seeing a bunch of private insurance companies coming back in the market, which should help stabilize rates or maybe even reduce rates. But what is all this Citizens talk? First, I think it's important to understand what Citizens is. You gave me a really good explanation there, and kind of how it functions and understanding that. So give me that answer, and then will it just go bust, or what's going on with Citizens?
Yeah, so Citizens was formed after, I think it was Hurricane Andrew. It was formed out of necessity and kind of the insurance company last resort. So when you couldn't get insurance, Citizens was there to kind of help those homes that maybe had some older roofs or maybe had like a recalled electrical panel that no one else would want to insure. Like Citizens was there to kind of fit that niche.
Maybe a little more risky for insurance companies.
Yeah, and so since Citizens it's unique where, again, every other company has reinsurance, right? That protects it. Citizens doesn't. It's backed by the citizens of Florida. So when Citizens gets too large, they run the risk of doing assessments. So if Citizens runs out of money, they will assess the policyholders as well as taxpayers to pay those claims. And so that's where Citizens really can't go bust. They'll just tax us to help pay for those outstanding claims. And that's where right now, with all that craziness going on because of the roofing fraud, Citizens was unique because it's legislatively governed. They had rate caps, so they couldn't increase rates by a certain amount each year. And so that artificially kept Citizens' price down. So Citizens quickly became the cheapest option, which it was never designed to be. And so many people turn to Citizens. Well, now Citizens is the #1 insurance company in our state. And that's where right now they're going through a depopulation where they will proactively reshop your policy. And if there's an option that's within 20% of the Citizens renewal, they'll get you out of Citizens. So you'll hear like people say, oh, Citizens is dropping me. And And really, they're just transferring your policy to a different company as a way to prevent those assessments from happening. And that's where like we've had these back-to-back storms. And again, since Citizens doesn't have reinsurance, there is a bigger risk for Citizens to do these assessments, and they don't want to do that. So they're trying to get policies out of Citizens to reduce their risk.
Yeah. So like a good example, if we had to like kind of layman's term this, is if I had Citizens and I was paying $5,000, whatever, or $4,000 for my insurance policy a year. But then, Tip Tap or another company just randomly came in and they were within 20%, even if it was more expensive, about 20%, they're basically going to say, hey, listen, appreciate you, but we are dropping you, but we're really shifting you over. We found this other company over here that's offering this. You need to go with them.
Yeah.
And the reason for that is if for some reason things went crazy and they were, underwater and they needed to do that assessment, they might say, hey, instead of $4,000, now everybody has to pay $6,000, right? Random number. They're going to pay $6,000. All these numbers are going up. And that might be future, but you were explaining to me, I was like, well, when do you pay that assessment? Is it on a future payment or is it due right now?
Yeah, it's due. It's like an extra bill that you'll get. And you have to pay that to continue your policy. So that's where Citizens does not want to do those assessments. It would create a nightmare for so many people because a lot of people too, they're elderly, maybe fixed income. And so that's a huge hit for them. So they're really trying everything they can to not have to do those assessments. Yeah. And
and what happens? I mean, so essentially, and didn't you say like there's like even a last resort with the state, or no, that's it. So like it'll just be covered with assessments.
Yeah, be covered with assessments. And again, that's where they have, the first kind of line of defense is the policyholders, and the second line is taxpayers. And so that's why Citizens can't go bankrupt. They just will assess everybody to pay those claims.
Yep. Gotcha. So had a solving chaos. Sounds like, yep, it fits. Milton looks to cost Florida between 40 to 60 billion. I don't know about those numbers, but not saying it's not. Helene impact to Florida is lower since damage was limited to the coastline Big Bend area. I think insurance has to go up and not down.
Yeah, and that's where as long as the reinsurance, they call it a reinsurance tower that the insurance company purchases. As long as they purchase the correct tower, they've already paid for those claims essentially, because you're buying reinsurance for the year ahead. So like after hurricane season, they start, insurance companies start negotiating. And these are huge companies like Lloyd's of London and just massive companies where they literally, CEOs, they fly out to London, they sit down with, they're called syndicates, which always makes me think like mob, but it's, they sit down with Lloyd's of London and they will negotiate like we need $100 million. We need $1 billion worth of reinsurance. How much is that going to cost? They find out what that cost is, and then they bake it into their 2025 policies. So they're essentially already paid for these events. It's when you have like these two storms again. If we had two back-to-back Miltons, different animal. You're right with Helene kind of hitting the Big Bend area. It really wasn't a big, I'll say, insurance impact. There was definitely some devastation, and people have, tragic what happened up there, and then also through like the Carolinas. But it would have been, I think, 10 times worse if it hit Tampa directly. And so that's where if you had those back-to-back Miltons, it may be a different story, because if they call it piercing their reinsurance, they have to pay then extra money to get access to different levels of reinsurance, and that's where you can see rate increases. But right now, the insurance companies essentially already paid for these claims.
Okay. You guys have any questions on insurance at the moment, or if anybody watching? Anything he said stood out to you?
I think he hit all the points. Good job,
Awesome.
Ryan.
Yeah, there's a lot there to know. I think the only last question I have, or last thing with insurance that you brought up, was I did ask you, I was like, man, what is this Tip Tap company? Are they a good company? You said, yes, they're backed by HCI, kind of big brother there. So a lot of support there. And then I said, well, what would be good for somebody to know when you're shopping insurance for your house? Because ideally everybody's worried about like the what if with insurance, right? So you had mentioned just really finding the solid company. So what would you look for with finding that?
Yeah, and that's where, to me, it's longevity. And in a lot of these new companies, it's who's behind it. So those are the two things to look for, because a policy is a policy until you need it. And when you have these large, wide-scale like hurricanes that go through like Milton, the daily claim intake goes from maybe 10 to 20 claims a day to literally thousands of claims in a day. So if you don't have the staff to handle all these calls that are coming in, if you don't have the adjusters on staff to handle these claims, what it does is it creates a lot of frustrations with the homeowners because their neighbor had a claim and they already got the roof fixed and they're waiting on their insurance company to get back to them. And so that's where like I'm really grateful and hopeful all these new companies coming in. It's important to know who's behind them. If it's individuals that really don't have a lot of knowledge of insurance, they just see dollar signs. I'd be hesitant to go with a company like that to save a couple $100 versus going with a company like Tower Hill, for instance. They've been around for over 50 years. I mean, they've weathered countless storms, do a great job in our state, and they know what they're doing. Other companies that are coming in that a lot of the executives from bigger companies stepped and are forming other companies. Those again are going to be, I think, good options because they have that knowledge, they have that background and wherewithal. So again, those are the things I would kind of look out for and talk to. Again, I'm happy to be candid with people if they have questions about it. But talk to your agent and make sure that you're not saving $100 to go with a new company that literally has zero experience and has been around for a year and really doesn't have a good, I'll say, staff to support a large scale event.
Yeah, it's not in all situations, but sometimes you get exactly what you pay for, right?
Mm-hmm.
Last thing, and I think we covered it, but I just want to make sure. Flood insurance. Do you foresee flood insurance going up post hurricanes?
So,
especially in coastal regions, that's what I'm asking. Sorry.
Yeah, and that's where I would say yes. Now, the nice thing about FEMA policies, so FEMA, you have the National Flood Insurance, which is NFIP. Those policies, again, are legislatively, I'll say, dictated. And so they can't increase rates more than, I think it's 12 or 15% a year. So we're probably going to see 12 to 15% increases next year. Privately held companies, like the private flood insurance companies, aren't governed by that same legislative ruling. So they could increase, double or triple rates.
Okay.
The good news is that, let's say, so someone has a FEMA policy and they're going to be selling their house and they have a $1,200 rate. The new rate might be $8,000 because, again, FEMA, because of those rate caps, have kept that rate low. They've maybe been in the house for 20 years. So again, they've been able to kind of stay below what the market is. FEMA allows flood insurance to be transferred from a seller to a buyer, and they're able to maintain those grandfathered rates. So if you're dealing with someone that is, again, coastal, I would always find out what the current owner is paying, because again, they can assume that seller's policy if it is a FEMA policy, and that'll help keep, again, that rates low because they're able to maintain that grandfathering.
That's awesome. I didn't know that. That's a good thing. So from the real estate side, if I'm buying a property, let's call it Davis Island that took some damage, right? Or somewhere in South Tampa. If I go to buy their house, they had a policy. I can assume that as the new buyer if they want to give it to me.
Yep.
Second question is, can you transfer that? Let's say you're going from one area, let's say Davis Island to West Shore. Can you transfer to a different property, or no, it's with that property?
With that property. So it has to stay with the property. So yeah, unfortunately, you can't also transfer that grandfather like you would like tax portability or something like that. You have to maintain that policy at the property. So it's great for the buyer. But again, if the seller's moving to another, home that's on the coast and they didn't have flood insurance, the seller didn't have flood insurance, they have to start over. And again, those rates will be a lot higher. It was a couple of years ago, FEMA changed the way they rate flood insurance risk. And that's what's caused a lot of increases.
And that's FEMA specific policy, not private.
Correct. Yeah, private flood is a different ballgame.
Awesome, man. That's awesome. Honestly, that's a ton of really good information. I appreciate you sharing that with us. But now I'm going to pick on Brian a little bit because with all of this going on, I know that he pulled up some good articles. That's how all the juices started flowing with these conversations. He was like, man, what happens to real estate markets and everything else post hurricane? And you mentioned Hurricane Andrew back in the 90s in Miami. So that's kind of where things started. So Brian, tell me about that article. If that's how you want to lead into it, tell me what your findings were and what you're thinking.
Sure. So Not a ton of studies on it. I did find a couple that were actually really interesting. Basically, and a lot of times what they've done is they've analyzed when there's been multiple hurricanes, what's the effect. So it basically dates back to the early 2000s, analyzed what the real estate market does following these hurricanes. And it's kind of surprising. What they ended up finding was for affected areas, typically there's a sharp decline in sales for about 4 to 6 months. And then after 6 months, sales activity starts to level off to what it was pre-disaster.
Okay.
In terms of price, was actually affected areas tended to.
Brian, I'm sorry, but you kind of froze up for a second there. You said that 4 to 6 months to affected areas typically decline, and then what happens?
Then they actually resume their normal pace of sales. Something else was it tracks what the 3 years look like after a hurricane. And what actually was discovered was in affected areas, it compared affected areas compared to unaffected areas. So like coastline, for example, compared to inland. Those affected areas actually appreciated about 10% per year, whereas the unaffected areas were at about 5% per year. So they actually outperformed. After that initial dip for those first couple of months, it seems like the housing activity got back to normal and those prices actually grew further. And one of the reasons that it gave for what's that reason for the drop in sales volume for those first 4 to 6 months is, people are securing financial assistance from the government. They're getting their lives back on track. Maybe they need to remodel their homes. They were planning on selling them in the first place, but it takes a couple months to kind of get back in the swing of everything. So there's that sharp drop up front. And then it really normalizes after about 4 to 6 months.
Yeah. And I never like to just fully say, oh, yeah, that's what's going to happen. I think it could be A or B. Now, the question mark for me is when that article was being studied, what was the real estate market doing, specifically hyperlocal? We've had a sharp increase the last few years. So will that trend the same way as that article? I don't know. But at surface level, if I just had to take it for what the article was saying, I mean, it kind of makes sense. Like you just kind of touched on it. It's like, man, all these, especially in our areas, we have a lot of older homes, right, that are maybe dated. If they're getting updated, if they're getting improved, if they're getting better, sometimes they're getting knocked down and rebuilt. I mean, there's so many different things they're doing to elevate the quality and, not just cosmetically either, just like structurally make it more sound. That would give somebody more confidence in a home and would put more value into that property. And to be fair, Florida living, it's all about coastal in a way. If you get those water views, that's always going to be prime real estate. Right now, we're just kind of in like a fearmonger state of being. So I do feel like, that article makes sense. I mean, I could see things like kind of settle down, right? And Phil touched on that on the real estate side. Like we are seeing people right now literally saying, hey, I'm just not in a position, whether they're older or financially, they're not going to make the difference. They're just like, I'm taking the insurance policy and I'm just going to list the property as, somebody else's investment opportunity. Right. What are you seeing on mortgages, man? You're the mortgage guy. So let's talk about that. I'll let Phil dabble with the real estate a little bit.
So mortgage rates, we've seen some interesting things lately, right? Big drop in interest rates since July to about September. We saw the Fed come out and cut rates in September.
I'm sorry. What did the Fed was saying too all year long, kind of like 4 or 5 going into next year? We're just going to see this nice, easy decline, correct?
Yep. And something to consider, right, is that when it comes to anything, mortgage rates, stocks, bonds, you name it, nothing ever goes straight up and nothing ever goes straight down. It may go like this and have a little candlestick where then it's a sell-off. So nothing ever goes straight up or straight down. So what we've seen is since September, there's been a lot of positive economic data that's come out, a lot of jobs being created in the economy, lower unemployment than was originally forecasted. And there's 2 potential rate cut meetings, one in November, one in December. People are starting to wonder if, and economists are starting to forecast that we may not cut rates. Maybe we're not at that point yet where we can do additional cuts. And the biggest thing to consider is your mortgage rates are not based on when the Fed cuts rates. So the Fed funds rate is going to be for short-term debts like credit cards, car loans, home equity lines of credit. Your mortgage rates, your 30-year mortgage rates, those are long-term debts. So those are going to be based off of, for the most part, they're going to track inflation, right? And they're going to track the 10-year treasury, mortgage-backed securities. The biggest thing is inflation. So when we got that rate cut, the market was rallying saying, okay, looks like we're starting to get inflation under control. You know, jobs numbers are coming down. The economy is starting to get a little bit weaker. Inflation is starting to get under control. Now with all this recent data that's come out that shows the economy is actually doing much better than everyone expected, that's why we've seen mortgage rates actually start to increase and start to level off now, is because it brings the question of, is inflation really under control? I think ultimately, long term, yes, rates are going to go down. You know, if we're looking at a couple of years. Short term, your guess is as good as mine. They could go up, they could go down. They'll probably go up and go down and go up and go down a little bit. But I think in the longer term trend, yes, they're going to go down.
You think any of it's politically driven?
I think those jobs numbers are not exactly kosher, if you know what I mean. And right around the time.
So if we had to, like, I know there's a lot of people saying, man, I don't know about these numbers, or yes, they are, no, they're not. I mean, you're seeing all kind of stuff come out because, again, I think a lot of people, and nationwide is different than hyperlocal as far as like cities, right? But nationwide, there's a lot of people that are, you know, kind of hurting just from years of inflation issues right at the moment, right? Things are always just pricey, and the adjustment is a big change. Do you think that once we get past, let's just call it spring of next year, once we get past elections, you think we'll have a better idea of what's going on and you can no longer say political? Or
I think we'll definitely have a much better idea of what's going on. We'll have a lot more economic data at that point. And the Fed's stance has never changed ever since they started this whole raising and lowering thing. They're basically saying at this point, we don't have enough data. It's going to be data dependent on what we do. So if we have another 6 months, 7 months of data, we'll have a much better idea on what's going on. Like, we just started cutting last month. This is very early. We don't know what's going to happen. They're still testing it out.
Yeah. And ideally they're still measuring inflation, right? They're trying to make sure inflation gets to a level they want, but they also have always said, like, hey, our game plan is to lower rates.
And they don't know, you know, a lot of things with presidential election, political, they do contribute to inflation. You know, there's questions if there's tariffs, are those going to raise inflation? That's what the market just doesn't know yet. And once we have 6 months more of data, we know what kind of policies are going to be put in place. The market gets less scared of what's going to happen. And at that point, we'll have a better idea. Yeah.
And I think, you know, I'm going to kind of transition to real estate a little bit. Is there anything else on the mortgage side that you want to offer in any way, or just so I don't miss anything?
Sure. So, you know, it may not apply to some of our people, but I figured I would offer it for people that were affected by these hurricanes. There is a special program that's out there. So if you're a renter as well, you don't have to own a home, but if you were a renter as well, and let's say you got damaged by the hurricane, you're displaced right now, you can actually get into a home with $0 down. Right now, you have up until a year after it was declared a disaster by the president to purchase something, but you can get in with $0 down right now if you were affected by the storms.
Okay. Any special interest rates or anything we got to know about that? I haven't heard about that one. So
it's an FHA. It's called an FHA 203H program. So if you're a renter, $0 down. If you owned a home that was severely damaged by the hurricane, then when you go to buy a new home, you can buy with $0 down. And we actually don't need to factor in the existing payment on the current home that you own. So you don't have to worry about trying to qualify for 2 properties at the same time. It's a benefit and really a way to help people out that the government's rolled out. It's through HUD, but we're starting to do some of these programs for people.
Got it. Got it. I mean, a lot of these questions, right, are starting to twirl as far as it always goes into, okay, well, what about housing? What about affordability? What's going to happen with prices and inventory and everything else? And I mean, obviously there's just so many variables swirling around, but when you're telling me insurance questions and risk, and people are really they don't have all the knowledge that you just dropped on us today, Ryan. So people are like, what's insurance going to do? And as of right now, we just know that insurance feels high compared to what it's felt like in the past, right? There's no sugarcoating that. Brian's telling us that, interest rates have not just plummeted. They're still kind of hanging around. So we know that that's there, right? Naturally, that's going to slow down buyers a little bit. It's going to slow down people. I mean, Brian, on the mortgage side, are you seeing applications still coming in? Are you seeing it kind of taper off? Because I know for a little bit you were like, oh, it's picking back up.
It had definitely picked back up significantly. Obviously, the last month, for example, we've been dealing with hurricane. Within the last week, now that it seems things are starting to get back to normal, we've noticed a tick up again. Now that I think people are starting to resume their normal lives.
Yeah, what's funny though too is like if people always ask me like, what's the best time to buy or what's the best time to sell? Is it seasonal? There's no question that spring. I feel like spring to summer is always hot. And I mean, I'm not talking temperature. It's a hot time for real estate in general. But September, October, it always stands out. It's like kids are in school in August. So September, October always feels a little bit of a lag to me, regardless of, what's going on. You feel that on the mortgage side? Or is it, no, that's when they're starting and then it picks up? Because I always feel like December, January actually is where things kick in here.
I think I noticed the same thing. Usually that September is a little bit slow. October starts to pick up. November starts to go pick up a lot. So December is usually a very good month with a lot of activity.
I agree. And January, it's always like my team is like, hey guys, get your running shoes on because it's time again. Mm-hmm. But so I do wonder if some of it's seasonal in a way, September, October, but we started seeing inventory tick up. I said this a few months ago. Someone said December, no hurricanes. Exactly. And what they're doing is they're escaping. A lot of people relocating here are escaping blackouts from snowstorms. And they're like, hey, no more snowstorms. Let's go get some hurricanes. They probably go back and forth. But what I'm seeing is a few months back, we had I think it was like 6,000 homes on the market. And then instantly it jumped up in August to 11,000. And everybody's like, oh, see, the market's going to crash. Here we go. And I was like, no, this is a healthy place to be. If you go back to 2019, same time, I remember, Brian, we were on a podcast for this one. Mm-hmm. I was like, same time in 2019, we had 11,000 homes on the market. And it was a healthy market with about 3 to 4 months of inventory. Well, I looked up the most recent data and we still have the exact same amount. It hasn't gone up to 12, 13,000. So our inventory really hasn't changed much. We're sitting in the 11,000 mark as far as inventory for homes. We're sitting at about 3 or 4 months of inventory. And our buyers are still, they're still coming in. They're coming in a little bit slower because it is September, October, but I'm still seeing buyers. I'm getting calls daily, if not, by the handfuls weekly, saying, hey, Adam, help us buy a home. Hey, Phil, show us where we can get it. So that being said, that's kind of the update on that. But Phil, boots on the ground, Phil, what are you feeling with buyers right now when you do finally get that one that's like, hey, I want to buy? What are some things to pay attention to as well, like the advice you'd give them?
Yeah, I mean, to be honest with you, I think I'm noticing a change on the inspection side. Okay, I do think guidelines and as far as an inspection goes are going to tighten. Okay, give you just even a story, just in a deal that we put under contract in September, right? 2 weeks before the hurricane, we had a 60-day closing, right? So now we did our inspection when we went under contract to do our due diligence. Now 2 storms hit. Okay, what do the insurance companies or mortgage? They want to send you back out again, get a reinspection. Yep. So I just had to do another reinspection. And what I'm also finding is, okay, so when they had an inspection in the house, there was an old water stain, on the ceiling. So, the inspector said, no, this is old. We have a new roof on there. Now the mortgage company wants you to come back, not with the general contractor, okay, not with your home inspector. They want a licensed roofer. So I think you're going to see a lot more specialists, being called, for the duty for that. I really think there's just going to be a little bit tighter, requirements when it comes to that inspection side, which you need to pass an inspection to be able to work with with Brian and be able to work with Ryan. So I think that's on the forefront transactionally right now. I think we have to make sure that our buyers are also understanding that, okay, hey, we might have to dive a little bit deeper into these issues than you might have ever before on your other home purchases.
Yep. Ryan, are you seeing that with the insurance side, that they're needing that?
Yeah, a lot of companies are doing one or two things on the areas that were directly impacted, either re-inspections or the buyer has to sign a form basically stating that there wasn't any damage, and it's a way to, so that, you know, they purchase the house and then they try to file a claim. They're like, well, you know, you said there was no damage. So yeah, it's one of two ways: the re-inspection or that signed form.
Yeah. Do you feel that that's going to stay tight with the insurance companies, you know, 6-8 months from now, next year?
No,
or is it just a hurricane thing?
Just a hurricane thing. I think I am seeing, though, ironically enough, insurance companies do want licensed roofers to evaluate the roof. So if there's any sort of discrepancy, the home inspector opinion isn't flying. They want a licensed roofer to certify that this roof has 5 years of life remaining, or, you know, is damage free. So I could see that in the future, but this new reinspection signed form, I'm guessing maybe another month or two. So come January, I think all of those extra guidelines will be waived.
Gotcha. Now, you brought up a really good point. I'm going to kind of flip flop. I want to go back to real estate, but, you know, this is, I don't want to say a newer thing. I mean, they've always looked for 5 years, but it used to just be 20 years left on the roof. We're good to go. I've had it a couple scenarios where it's like, hey, we just need a roofer to tell us that there's 5 years left or not, so that we don't have to re-roof or not. And that comes up with, you know, for us on the real estate side to be able to negotiate a roof or a credit. However, I've had a lot of roofers say, man, I can't write down that there's 5 years left just from a liability standpoint. So, you know, like, kind of we're stuck between a rock and a hard place. They want this, and this guy says I can't give this. So what happens in those scenarios?
Yeah, and that's what's, I'll say, it's honestly, it's a nightmare for me to try to navigate. The good news is there's still options. You wouldn't be able to get a standard policy. You'd have to go with something that maybe excludes the roof, or a lot of companies now offer this endorsement that's called depreciated value, or an actual cash value coverage on your roof. So instead of getting $20,000 to replace it, you know, for a 15-year-old roof, they say, okay, a 15-year-old roof, it's got 5 years of life remaining because of that 20-year mark. Your roof's only worth, you know, $4,000. So if it blows off during a storm, you're only going to get $4,000. So so a lot of companies are allowing those endorsements, which allows you to kind of navigate those tricky situations. Citizens, again, they're great because, again, their guidelines have stuck true to that 20-year mark, where so many companies have switched to 15 years. But yeah, as long as the roof's 20 years, 5 years of life remaining, and they go by what the home inspector says, they can still get insurance. Now, I will give a caution, though. When it comes to getting an insurance policy, the underwriter, the company, like Citizens, for instance, has 30 days after the closing to do their own inspections. And so if you have a very, I'll say, friendly inspector,
on the fence.
Yeah, it's like, oh, I'll just do it 5 years, but, you know, that's really pushing it. Citizens can come back, or any insurance may come back after the closing and say, hey, we actually noticed A, B, and C on this roof. We want to replace. So just be mindful of that, where, you know, just because the inspector says it's not gospel, it can change.
Yeah. So any buyers out there, or people that are thinking about buying a home that are watching, make sure your real estate agent is, you know, knows all these things, because that's a real good opportunity. And nobody's better at it than Phil, is going back and saying, hey, we're right on the line here, right? If you need to, we can talk to you. We can get you with our insurance agent, Ryan. He can explain this to you, that we might get re-inspected, and that's too much risk for us as a buyer. We're going to need a credit here to make sure that we feel good about going into this deal.
Right.
And what I love about it is this is the market that we can actually do that. We're out of the market. Like, some people are saying, oh, this is not a great market. I would rather have this market where we have a little bit of leverage versus the one that people were just buying these homes and paying $20,000 over. And then, you know, and that was, you know, 2 years ago. So yeah, I mean, so Phil, what else are you seeing? That was a very good point, by the way, about, you know, what you had said. So anything else to give back of what you're feeling boots on the ground with some of our buyers right now?
Just on the buy side, it just seems to be, I would say, you're getting a lot more attention when you have interest in making a deal. I mean, we talk about the negotiation, the different leverage points now that we have. It was like we said, back 6-7 months ago, it's like, no, we're not going to do this. No, we're not going to do that. Now they're willing to work with you. So I agree with you, Adam. I really do think this is like, again, as a whole, as a market, there's a lot of uncertainty at the moment. I believe from a buyer's perspective, in resale now, before, 6 months ago, it made total sense to go new construction. I think resale now is something now you need to look a little bit deeper into, because there is opportunity there. And, it's just, it's getting a little bit exciting in that way, just because, you're seeing, what your intention is. You actually see it come to fruition, where, we didn't really find that too long ago in the resale market. So I think as a whole, inventory has definitely, has come up on the listing side. It's a little bit more difficult to get people through the door, which again, right, if you're a buyer, you're getting more attention. So
Yep. What's funny is, if you go back to our podcast, Brian's been on this with me for a while now, either podcast or video on YouTube. And we've always talked about them golden handcuffs. You can't leave a 3% mortgage and sell that house to go get a 7%. Mm-hmm. Well, time always dictates things. And unfortunately, we're still in that golden handcuff era in a way, right? As far as interest rates, we just talked about that. Mm-hmm. But we're seeing people just saying, all right, enough is enough. It is time to sell. Mm-hmm. Like, so some people are saying, I think this is the peak. I think this is whatever. I think we need to sell. Because they waited too long. They're trying to time it out, and it just hasn't come back around to them yet. And I think that they're getting to that point, especially as people get older. We have a lot of older folks in and around Tampa, even though it's youthful. We've got those boomers that are still holding on to those big, houses in the closer suburbs to Tampa, like Carrollwood and things like that. That they're like, yeah, we just need to sell. We don't need this big of a home anymore.
Well, Adam, to touch on that, I also have been noticing, though, a little bit of a trend. This is my own study, okay? A little correlation. The people
the Phil study, let's hear it.
Yes. The homeowners that have had that home for a long period of time, probably pre-2019, they're a lot more ready to pull the trigger, where, that golden handcuff is really for those people that have kind of bought at the highs in 2021 and 2022. They are staying a little bit tighter to their number, where if they've owned that home they're making a good return at this point. So they're a little bit more generous. That's what I've been noticing when I'm negotiating a house and I look where the house was purchased.
Yeah. Or they bought and they realized that that's not the place they wanted to be.
Right.
We're seeing that as well. Yes. We're seeing that, saying, oh man, I moved here, liked it. And now something's changed. And I think I think time has helped sellers a little bit be more realistic.
Yes.
We saw a lot of people over the last few months just saying, oh no, as sellers, just like, I'm sticking to my guns, I'm getting this high number. And now they're starting to finally realize. So, over the last few months, I saw a bunch of articles, and I even posted it in videos, that were saying, prices in Tampa are plummeting. And we've talked about it. It's yes, because sellers overpriced homes. They didn't price them where they should have been, but the values haven't decreased drastically. You're talking 1-2% month to month that prices might have come down, nothing 10-20%. So its values are sticking strong. Prices have now come down, and sellers are finally getting to that place where it's like, oh, okay, if I want to sell this thing, I can't be at 540,000. I need to be at 500,000. Mm-hmm. And they finally come down on their price where they need to be.
Well, and I also, when they are listing the house, right, and they have this higher number in their head because their neighbors sold it, 8 months, a year ago at this price, they enter a deal, and then that appraisal comes back, and, it comes back short. So, now no one in this market is most likely going to be bridging that gap anymore. So, right. That's also right with some sellers. They need that, either the time on the market or the realization, hey, I got a deal, but my house is not going to appraise. What am I going to do? I have to make a decision because, you're handcuffed again,
Yeah. Yeah. It says, David, Florida will see negative migration, party is over. Man, you're watching a lot of doomsday channels, aren't you, buddy? David, I don't know, man. I guess time will tell. I don't want to argue that one because I don't have that crystal ball. I think a big attraction to Florida used to be our affordability. There's no question there. I think cost of living was lower, but I did a video that said cost of living versus quality of life, and go look at some of those other cities, and the quality of life is not necessarily there, and inflation impacted everyone nationwide. So I think that you will see out migration to places like Georgia that are more affordable than Florida. But I think that your Chicago, New York, California, Colorado, you keep going down that list of places that are still more expensive. I think those people will still be looking at Florida. And I also think that certain places, let's just use Tampa as an example, our tech sector is booming. So you don't necessarily have to go into an office. A lot of tech, you can work from home and things like that. We're still way more affordable for a lot of people. It may not feel affordable to people that are local in some industries, but our medical sector is booming, our professional sector is booming, and tech. Those are all high-paying industries. Not hospitality anymore. That's the one that's struggling a little bit here in Tampa. And I think incomes always lag with inflation. So I think our incomes will go up eventually. For right now, I don't know. I guess let's circle back in 6 months and see how that migration happened. But I do think that, I don't know, a lot of doomsdayers, man. Party's over, inflation, traffic, condo. Yeah. I don't know. I'll go back and say quality of life there.
I've heard someone call it a paradise tax. So we pay a little bit more for that paradise tax.
Yeah. And also,
That's right.
We're becoming Florida for remote work. If you're a California job, you keep your job remote, still getting that salary, you move it over to Florida, no state income tax. There's a lot of advantages. It's going to be personal to everyone's case.
Mm-hmm.
Yeah, it is. It really is. So, folks, I appreciate a lot of you, jumping on here with us. I hope you pulled some good nuggets around or from this video. Ryan helped us understand the insurance industry a little bit more, which is kind of up on its end. Brian gave us a little more insight, as he always does, on the mortgages and what's going on and why things haven't just plummeted or dropped like we hope they will, because that'll just help our market. However, as Phil said, we're in a good place with real estate. Like, if interest rates drop down to 3%, 4%, we'd be in another crisis, to be fair. So I think all in all, we're in a good place. Yes, we went through some hurricanes, and Florida's pretty resilient here, as well as the real estate market. So I do think that we're going to bounce back pretty strong. Hopefully that data that Brian brought to us stays true, that the market will take a little bit of a dip, but we'll build back stronger. And I think we could see that. So sorry, the party isn't over, guys. Those few of you that think that. I think the party's going to keep going on. In fact, we like hurricane parties here. So thanks for joining us, and follow us on our channel for those next videos, because I got a lot more coming, guys. Have a great weekend. See you later.